The show is still the Easter Business Report on the Afia Business Morning. I'm Nnamdi Obaya. As part of our Power Week, focusing on the power sector, we'll be talking about the investment opportunities and obstacles with respect to the industry in the region and beyond from the lens of, well, potential investment advisor. And now, joining me live from sunny Barcelona in Spain, I have energy expert and analyst and founder of Adept Platforms, Folarin Bitire. Good morning, Folarin. Good to have you on.
Thank you. Good morning, Nnamdi. Good morning, Enugu. Tutuoma. Thanks for having me today.
So then I'll say my other caro. How do you say good morning in Spanish?
How do you say good bon dia? I believe it's...
I'm not even going to try. Yes. But thanks for joining us. So, of course, power is not something that in Nigeria, or lack of power, it's not something that Nigerian is strange to. So let me start by asking you directly. What would you say is the main issue why we've not been able to get proper investments in the power sector?
Okay, good question. So the main issue why we've not been able to get proper investment is structural, and it has to do with pricing. So as with any business, there's a demand side and there's a supply side. So before you can supply any good to the market, you will count the cost to supply the goods. So let's assume it takes you 100 naira to be able to supply 1 tube of yam. You need to be able to sell that tube of yam at least 110 or 105 naira, to make it worth your while. So the problem in the power sector in Nigeria is that when you count the cost of what it takes to supply 1 kilowatt hour of energy and the cost of what people can pay in terms of the tariff, there's a mismatch because between 2005 and 2009, NEPA was charging around 4.55 cents, US dollar cents per kilowatt hour, but it was costing something like 15 cents to deliver 1 kilowatt of energy. So obviously, before they even started business, obviously they had lost so much money. So on an annual basis, they were losing something like 2 to 3, maybe even 4 billion some years, dollars, on an annual basis. So by the time you calculate all the losses that they made over the years, it's not really a surprise that NEPA had to go.
So, talking about NEPA going, the Gencos and the Discos inherited, a lot of their property, a lot of their customers, a lot of their liabilities. Now, we still have the middle leg, the TCN, being, the major bridge between Gencos and Discos, and we have issues of the national grid failing frequently. Now, if the TCN is still, within the domain of government ownership and is still mired in all those debts and liabilities, is there any hope for Nigerian power? What do we do? It means that are we doomed to forever have that debt sitting on our head?
I think where there's life, there's hope, because that's my worldview, right? So this is the way I think we have been trying to solve it so far. So far, what we've done is we've said, okay, let's disaggregate this huge, humongous grid, and let's create smaller pockets and localized solutions. So what has done is Enugu, for example, has created their own, or is trying to create their own energy market. They have their own regulator. They've already approved 2 Gencos to come on stream. So those guys are already working to increase energy generation within Enugu State. In Lagos, we've had similar things. In other parts of the country, we've had similar things. So they've also tried to liberalize the pricing regime. So you've seen the emergence of the kind of pricing that we see with Band A to Band E, where Band A customers are supposed to get more energy and pay more. So what they're trying to do essentially is they're trying to create some safety net for the people that are on the bottom end of the society, but then at the same time they're trying to create some proper demand for the electricity, so that people who are investors like me can come in and make such investments in energy. But before they can make those investments, people need to see that there is real demand. And what I mean by demand here is not just that people want electricity. It is that there is a customer base that can pay and is willing to pay for this electricity, because if you don't have that, then there's no business. So I think the way forward is curating this demand, and then making sure that there are proper, there's a proper framework, a regulatory framework that can enable investors to come in, to make investments, and to go and sleep knowing that, their investment is safe, their investment is secure. There's low level of vandalism or electricity theft, and all those kinds of issues. And the main focus here is that there's demand that can actually pay and justify the investment, because without this demand, there's no business.
I mean, this bringing up this demand now, this worries me because, like you rightly said, demand is not just wanting, it's the willingness and ability. If you remember economic definition, you have to be willing and able to purchase to demand. Now, given the very low average purchasing power in Nigeria, the fact that all of what you'll be using, maybe except cables, will be manufactured outside Nigeria. So you're going to get everything with foreign exchange. Even your technical experts are coming from abroad, but you're going to collect your tariff in Naira. So that means that it's going to be a lot of Naira when you factor in, no matter how you spread the investment cost over time, and spread it with operational costs per month, it's going to be very high on the average Nigeria. You mentioned, yes, Enugu has the Enugu Regulatory Commission. They've already talked to EDC, who have made a subsidiary, Main Power, working in Enugu, and we're seeing that happening in different places. So what happens now when, this investment you're talking about, the fact that, if I'm to be honest, I'm looking at, while there's the willingness, the ability, the cost alone of setting up, and then the pricing, which has to be based on operational cost and a portion of the setup costs spread over time. Even before you think, even to break even, do you think that the average Nigerian can afford it? And then what will now be the strategy to, will I say, indirectly subsidize? Will it be maybe supplying only to energy companies and selling excess? What will be the strategy? Because if we were to just take it at face value, it means that the average Nigerian should just forget about having electric power.
Yes, I think very good submissions. I think the approach needs to be phased. The idea that we can just provide electricity to everybody and government should subsidize or whatever, I don't think we've been through this road before. We know where subsidy leads, and I'm pretty sure that most people will agree with me that we don't want to create another serious subsidy debt spiral within the country. So I think what we need to do is we need to first, like I said, curate demand. So how do we curate demand? So my company has invested in this company, right? So what the company does is we convert, it's called Swap Energies. We convert keke napeps and koropes. Koropes are those mini buses. I'm not sure what they are called in Enugu, but in Lagos they call them korope. So these two types of vehicles, obviously, as you know, would consume a lot of petrol and whatnot. So what we do is we convert them to EVs, and with these EVs, the people who are riding or owning those vehicles are actually spending 50% less than they would have spent on petrol. So essentially, we are making it more efficient for them, and we are putting money back in their pockets. Now, what we are doing with this company is we are building this demand, and in building this demand, we're actually increasing the justification for more power. I think more people need to do this, not just in EV space, but in industrial parks, for example. I know that in Anambra, in the eastern region of Nigeria today, there are a couple of industrial parks that are coming up, both government and private-led. I know that in Lagos, for example, you have the Lagos Free Trade Zone and co. You have a lot of industrial activity happening. And what these guys are doing is they are basically batching their demand. And because maybe you produce cream, I produce, deodorants, and we have like 20 companies, as opposed to each person running their diesel gen, we all come together in an industrial cluster, and then we have a gas-powered power plant that can serve our needs. Now, after serving our needs, we have some excess. We will always have that little excess, and that little excess we can then either sell to some community or sell to some other industry or whatever the case may be. Like, for example, the Dangote refinery is generating more energy than it needs, and it is actually in conversations right now to sell some of its power to other people. So I think this is how we get to where we want to be, especially with businesses driving the impetus here, because I know that in the South and even all over the country, you have some Chinese companies and some foreign companies who, as part of their CSR, what they are doing is they are literally generating power for their own manufacturing or whatever activity they are doing. And the excess that they have, they are giving to the community at some subsidized price or some reduced price. Because for them, the cost of 20 megawatts and 30 megawatts is not very different. In terms of the fixed cost, is pretty much the same. So if they have increased demand, the price difference might not increase so significantly. So for them, it is basically like free energy. So they're able to even let it go for free sometimes. But even if you pay for it, you can pay way less. So I think this is the type of structure that can actually allow for the subsidy, if you want to call it that, of electricity for some kind of people to a certain extent. But like I said, this is not the panacea for this problem. We really need to industrialize, and we really need to start growing the demand for electricity. And this starts with things like swap energies. This starts with things like Dangote refinery. This starts with things like Nigerian breweries. This starts with things like industrialization in every single facet of it.
So there's something you've said here. We've always looked at it as, power driving industrialization in Nigeria. But now your strategy seems to be industrialization to drive power. Like, it seems as if you're suggesting we do it the other way around. Because we always said, businesses are leaving. We need to up power to keep the industries. But now you are saying we should do it the other way. We should push up industries to push power up. Now, I mean, there is some credibility. I mean, we've seen in Aba, for instance, geometric power. We know that at the start there were some issues. Whether Area, Aba in general, Ngwa, the textile markets were enough, reason to have geometric power. But then with the emergence of the Aimba Economic City as also off-takers, we saw that encouraged those financial people, to put money down and say, yeah, this project should go. So there is some credence to that. But let me now try and get some free consultancy out of you for the region. We've seen what happened in Aba with this. Why is it that, and you've mentioned the clusters coming together. I look at Onitsha. Onitsha has, main market, new tire, builders market, Onitsha town. It has a brewery. It has factories where there are things like Dozy Oil and so many businesses there. Why has Onitsha not been able to create a cluster? The same thing can be said, in Enugu here. We have Ugbete markets. We have a lot of, estates. We have, I think, 10, 15, maybe even 20 tertiary institutions. Maybe about 10, 15 in the Enugu metropolis area alone. Why is it that, nobody is looking at these clusters and seeing them as viable business? What is the East getting wrong that is not attracting these investments to all these very, very viable clusters?
I mean, I wouldn't say it's just the East that's getting it wrong. I think, generally speaking, if you look across Africa, this is like an African problem. Even outside of Africa, there are some areas where they're not able to get justification for investments. And the reason for that is, by the time, as an investor, what you do is you come in, you say, okay, I need to be able to make XYZ type of profit for it to make sense. Because investors don't just have money, they tend to raise money from other sources. So if they're raising money from those sources, there's a cost of funds, right? So essentially, you need to do your plus and minus to say, okay, if I put this 100 naira here, will I be able to generate the 120 that I need to generate for me to break even? Do you understand? So a lot of the time, it is because of a lack of justification. And the truth is that in as much as we look at the number of customers or number of possible customers, but perhaps number of customers might not be a big indicator as to what is viable. Let me give you an example of what I'm saying. In Nigeria, the biggest disco by customers is Ibadan Disco. Ibadan Disco feeds Ibadan, parts of Ekiti, parts of Kogi, parts of like Oyo, quite a number of states. Exactly. And it's quite a number of states, right? But if you look at the most viable is probably Ikeja Disco. It has, 1.2 customers thereabout. So less than half, But in the end of the day, Ikeja Disco is a better disco because they have more demand. They have people that are more willing and able to pay. So I think the focus now should be on, okay, how can we get those kinds of structures where the cost of the power won't be prohibitive? What I mean by that is, let's look at a value chain in the country. Let's say in the East, let's say there's a value chain for palm oil. And let's say, and I know that in Abia State, for example, palm oil is a big thing. And in so many of the other states, in the South, and Southeast. Now, let's say we want to increase the palm oil production and we want to use this palm oil as the base load to be able to basically pay our light bill. What I mean by that is you need to have like a viable business that is making enough money despite the high cost, quote unquote, of power, that viable business or that viable industry can pay for the huge cost of the infrastructure that is required. Because don't forget, in Nigeria, we say that we don't have a maintenance culture. I disagree. I think we don't have maintenance dollars because to maintain these things requires a lot of dollars. And like you rightly said, you are spending dollars, but you are collecting your revenue in Naira. So there's a mismatch. So let's say you collected money at 300 Naira or you invested at 300 Naira, your the dollar has moved and all. And by the time you check and balance, you're not able to return a lot in dollar terms. So what we need to create industries that are focused on either import substitution or export, where it is basically dollar generating. And on the back of that dollar generating industry or that dollar linked industry, we can now layer the cost of the power such that that cost of power is affordable for that kind of industry. And then that industry can basically subsidize the power for everyone else.
I mean, I 100% I agree with that, again, it's coming back to this, your strategy, which your very unique strategy, which I think is quite interesting, of not using power to push industry, but using industry to push power, which I think is very, very interesting, guaranteeing the money for the, investors to make it attractive. So now, let's look at the social and security aspects of it. Because whether we like it or not, power, light is an important tool in national security. Wealthy places are safer than dark and ungovernable spaces, particularly at night. And we've seen the government spend trillions on rural electrification, of course, which has led to a lot of, high-tension cables leading to nowhere. So my question now is, if the industries come in, and begin to form value chain related blocks, maybe because the palm oil industry is doing this to bring power, some guys who are also doing tractors that work on the farm, the guys that repair, assemble, say, okay, we should move into this area, and organically an industrial cluster is built. What happens to the remote communities, who it costs too much to get, which in my opinion, it costs too much to get light to bring back too little or almost no revenue? What happens to those communities? Do these companies subsidize them? What does the government do in between to make sure that we don't now turn the companies to mandatory CSR, to start engaging in mandatory CSR. So what does the government need to do in the middle to make sure that power can still get there, but it doesn't affect the profitability or, the operations of these businesses whose activity are responsible for the ability of that region to have power?
That's a very good question. And I'll respond by saying something that they say in Southeast Asia. In Southeast Asia, they say that uniformity is not conformity. So what that means is that the fact that you want there to be egalitarianism or you want there to be equality doesn't mean that everybody must be on the same thing or do the same thing. So if it doesn't make sense to deliver the infrastructure to, some remote village, why do you need that? Why not focus on, solar or some distributed means? Because don't forget that the folks in those kinds of areas perhaps don't require the same type of electricity that maybe people in like dense urban areas would. So I think those kinds of areas you should focus more on solar and the likes. But then I think also we need to kind of rethink the urbanization or the rural electrification in the sense that we are looking at it in a silo and we are just looking at providing electricity to people to consume. I think we should probably be looking at, okay, what is it that these guys do and how do they contribute to some larger value chain such that I can actually start industrializing to some extent in those areas? Because don't forget, those areas that are rural and remote, those areas tend to have a lot of land that is probably not used or not used adequately. So what exactly do they have that we can leverage, whether it be human resources or natural resources or whatever the case may be, that we can leverage in order to be able to bring them into some form of industrialization? I think the way the governments should, and this is state and federal governments, if they were to appoint me as some consultant, I would basically be telling them we need to think of ways to bring them into some value chain. So we need to have a value chain plan across the board. So for the Southeast, for example, if Afia is focusing on palm oil, we need to have a value chain plan for everybody as much as possible anyway. Because the idea is that if we keep looking at people as victims or we keep looking at people as dependent, then those people will never really rise from that. And what we want is not a nation of dependent people. We want a nation that everybody contributes, everybody's productive. And the only way that can happen is if we have these kinds of value chain plans where the value chain itself that we are looking to grow for either export or import substitution can actually justify the electricity that is required, so that electricity infrastructure can actually be made and can actually be, the investment can be done. And when the investment is done, it will bring people in, it will pull people out of poverty. This is what, to some extent, this is what China did in Guangzhou, because they made Guangzhou a factory. The whole city was pretty much like a factory. Now, what did they do? They found people abroad, they found demand abroad, and they said, okay, come and set up here. And then they created the electricity for Guangzhou specifically. And they said, okay, anything you want to manufacture, before they could have even gotten the money to do all those infrastructure, they will have already had the demand. Do you get what I mean? Yeah. So because they already had that demand, they were able to get the money and put the infrastructure in place. And because they put the infrastructure in place, they were able to get their people. And even people from rural areas moved to Guangzhou. Why? Because there were jobs. So this is to me our road out of this electricity issue, because the electricity issue is not about electricity. It's not about the supply of electricity. I think a lot of people wrongly think it is, but it's not. It's actually about growing that demand for electricity, and that comes with productivity.
I mean, that's you've actually flipped the script on everything today, because for decades the complaint has been no power supply, but today a different angle, no power demand. And so let me now, my final question, let me bring it to this. The solution, no matter what I hear from everybody, seems to be And you've also said that again today, even though your angle is totally radical and different, very innovative, which is, creating the demand and then selling off excess supply from created demand, as against investing, looking for demand and looking for its supply. So my question is, when everybody creates and has this excess demand, a lot of people will most likely sell back to the grid. When you're selling back to the national grid, and we now have the moribund TCN, that is trillions of naira in the hole, what is the one thing we need to do? Because that's still where my problem is, that the TCN is in public hands. I had a chat with you the other day where I was trying to talk about, privatizing the TCN, which of course you quickly shut down, that no private entity can handle the liability, the baggage the TCN is carrying. So my question is, what do we do now about a moribund TCN when, that's the only way to disperse of excess energy?
I think that's a very good question. And I'll refer you to the story of a company called Conexa. So Conexa is a Nigerian company who, and it's not just them, there are so many other companies. But basically what these guys have done is they've gotten some licensing from NERC. NERC is the National Electricity Regulation Commission. And these licenses allow them to basically trade energy and create local markets for specific types of customers. So what they've done is basically create their own grid, mini grids. Obviously not in the same sense as TCN, but what they've effectively done is they've been able to kind of bypass TCN to some extent. And I think this is another thing that a lot of people get wrong. In the electricity market, you don't necessarily need to. The reason why you need transmission is to send power over long distances due to high voltage transportation, basically. So the higher the voltage, the less the losses over a longer distance. So that's why you need transmission. But if you have localized power generation, for example, in Enugu, for example, it's called the coal city. So there's a lot of coal. So there's no reason why Enugu, for example, can't be thinking in that direction to say, okay, can we use some of this coal? Because yes, I understand that there are environmental concerns, but there's a lot of technology that's been developed to make that process much cleaner. So essentially what I'm trying to say is that if we have localized grids that are more local to specific areas, and again, there's already a policy framework that kind of leads us down that road. So, we're already getting there. If we have those localized grids, then perhaps we don't require all of the TCN infrastructure, because, TCN infrastructure was very relevant when Kainji Dam, Shiroro, and the four others that came out from NEPA were basically what was sourcing the whole country. But perhaps we are coming to a time, when the OB3 pipeline and the AKK pipeline are being laid now, and these pipelines would pass gas all across Nigeria. So perhaps we can actually generate power in every state, and this power can either be gas or otherwise, but we can generate the power in every state, and we can create localized grids. So for Enugu, for example, we can create a localized grid that serves Enugu specifically and serves Enugu's needs. And Enugu might not need TCN infrastructure any longer. Do you understand what I mean? So essentially, TCN then becomes the last buyer of last resort, in the sense that whatever excess that comes from your own local grid, you can sell to TCN. And TCN actually right now has the infrastructure to sell to foreign countries like Niger and Togo and Benin Republic and the rest. So essentially, we can actually start exporting electricity even more. Why? Because we would have created these localized grids. Because if we want to rely on TCN, it requires us to invest quite a lot of money in creating this central grid. And I struggle to see how we can justify that investment right now.
It's a very good point. But many people would say, even if we can invest, but please let there be light. I guess we'll still have to wait for a long time. Thank you so much for joining us this morning. And giving us some very unique insights on the power issues in Nigeria. And of course, I look forward to when you finally go from advisor to power player here in Nigeria. I mean, we need all our best hands on ground. Perhaps the time has come that we should all stand up, be counted, put our hands on ground, and knowledge, resources, whatever it is we have. Because I think the best resource we still have is us, the people who are here, and the people like you who have been looking at it keenly. I think all the knowledge, all the research, and all the insights trumps money, because it brings foreign investment when there's somebody who can tell, what the pitfalls are. Thank you so much for being here, Folarin, this morning. I'll leave you to go and continue to enjoy your beautiful sunny day in Barcelona. Have a very, very great day. Thank you so much for joining.
Thank you very much, and see you soon.
All right. And that's all we can take on the Instant Business Report. So stay tuned to channel 254 on DSTV, 17 GOTV, and of course, 748 on Free TV. So I see you at 10 a.m. tomorrow for another edition of the Afia Business Morning. I'm Nnamdi Obaya saying have a very profitable business day.